Hi, this is Kyle Ferguson with OptionSherpa.com, and today I'm going to do a short video for our subscribers to show them how I put a trade on each week. We've had a couple questions on the bid and the ask and which one they should use, so I'm going to run you through two stocks that we have in two of our different portfolios right now so that you can kind of get an idea of what's going on. So first thing we're going to do is on the Thinkorswim platform, which is where I execute everything and what all our videos will be on, also the TD Ameritrade platform, is I'm going to pull up this sample portfolio that I use, and you can see that I have Apple right here and Verizon down here. So those are the two stocks I'm going to show you two different examples on. So first of all, last week we sold a covered call on Apple for $522.50. So Apple was down here. We sold it really close to the money. You know, it might have tipped over, but as you can see, Apple had an extremely strong week, which is great because we made on the long part of the stock and lost a little bit on the option. So it was a profitable trade for the week. Right here is the 522.50s. That's where we sold them at. We need to buy those back today, and we need to look to sell a new covered call because this is a weekly strategy, and we need to do this every Friday before the close. So if I go to my monitor tab, I can see that I have the 522.50s right here, and I have 10 of them. Now, what you'll notice about Apple and a couple questions that I've taken is why do we trade the minis on Apple and not on anything else? Well, the mini options are only available for some of the bigger stocks out there, like Priceline, Apple, Google, these really high-priced stocks that a lot of people can't buy because they're so expensive. So if I was going to buy 100 shares of Apple right now, it would probably cost me, it cost me $54,000. Whereas if I just wanted to participate in Apple's dividend and sell covered calls on it, I could trade the minis, which means I would only have to buy 10 shares of Apple for $5,400 as opposed to $54,000. So what it does is it allows our subscribers to participate in Apple by not putting just their whole account in one stock. So right now, as you can see, I have 100 shares of Apple. Instead of selling just one contract, which equals 100 shares, I went ahead and sold 10 mini contracts. So a mini contract's worth 10 shares. So 10 of those would be 100. So right now you see we have the 522.50s. We sold these last week. We need to buy them back. So I will just click on this little dot right here and put create a closing order. It will come down here and it'll come up with my limit price of 23. When I buy these back, that's fine with me. I usually just keep the limit price in that comes up because I want to get into my next trade as quickly as possible. So I go ahead and I close this out. And you can see it was filled up there. Well, now we just have the 100 shares of Apple, and we need to sell our new covered call for next week. So right now, Apple's filled the gap right here from when it dropped 10% 14 days ago. That's not uncharacteristic of Apple. It typically does that. Once it dips like this, people realize that it's a good buying opportunity. So it's up today. Doesn't have a lot of volume behind it, so I'm okay. Go ahead and sell the covered call on it. I'm going to go back here to our trade tab. You can see that these right here are the days to expiration. So these are the ones we just bought back, and these are the ones we want to concentrate on for next week. So some of you might be trading the whole Apple 100 contracts or 100 shares full, so you would just buy one of these or however many you have. But for Option Sherpa, we trade the minis so that more people can participate. So we don't want these. We want these. We want the next week, February 21st, Apple minis. So I click on that. Apple's currently trading at 544. We have the 545s right here, so I'm going to go ahead and trade those. So we sell at the bid with these options, and we buy at the ask. This is our call side. This is our put side. We're going to sell at the bid, buy at the ask when we buy them back. So I'm just going to left click on the bid price right here. It will come up down here automatically. Now, one thing to keep in mind is we want to sell higher price and then buy them back at a lower price when you're selling options. So right here, you can see that the bid is 480 and the ask is 515. Well, since we want to sell them for a little bit more, what I always do is I rarely sell them at 480. Some of our stocks are really liquid, which means they have a really tight bid ask. So this would be like 480 and the next one would be 481. Well, you're not going to get anything better than 480. But for this, I always check this right here. And what I'm going to do is I'm just going to drag this little blue line somewhere to the center around here. And what that is I'm going to sell this option between the bid and the ask. Now, it's not that more advanced or anything. It just allows you to get a little bit better price. So instead of 480, let's try and get it somewhere in the middle between the ask here. And I'm going to go ahead. I'm going to make sure I have my 10 mini contracts equal to 100 shares. And I'll press send. And we'll see if that gets filled here in just a second. So while we wait for that to get filled, I'm going to take you back and I'm going to show you our Verizon example. Now, Verizon, you can see the difference. Verizon right here is just one contract because there are no minis. It's a smaller price stock. There does not need to be any minis. So what happens with Verizon is for every 100 shares, we're going to sell one contract. Last week we sold the 47 calls, and so we are going to go back to our monitor tab, which we're here, and we're going to just create a closing order to buy those back. So we'll buy these back, and we're going to just go ahead and press confirm and send. No reason to worry about this. Remember, at Thinkorswim, any option under 5 cents is free to trade. So this will be a free trade for us. That's why I put most of my stocks at 5 cents, and I'll run you through a video on that. And we just got filled on Apple up here. So we're good to go for the next 7 days on Apple. So right here, we have our 47 call that we sold last week. We're going to buy it back right now. I'm going to just press send. It fills right away because we did it at the market with with a limit price, the current limit price, so nothing needed to work. Now I'm going to go back. I'll type in Verizon. Verizon's kind of dumping off, so let's just go ahead and sell the 47s again. It might rally back up. We'll participate, but not. Let's go ahead and put this straight on. So I'm going to go here. Right here, so you see no mini options. You just see next week, 7 days away, which is what we want. We'll click on that. We'll wait for it to populate. And here's the 47s. Now, here's a good example. We got a bid of 29 and an ask of 30. Since we sell these at the bid, there's no spread. So the best we're going to get is 29. There's no reason to go down here and start to work this. You can see 29, 29. So one thing, though, is we only have 100 shares of Verizon, I believe. No, yes, we only have 100 shares right here of Verizon. So we're just going to change this to a -1 because one contract equals 100 shares. And it's at 29 right now. So let's go ahead and just push that, and it fills right away. Super liquid stock. These options are really liquid. So 29 cents that we just took in on, a $46 stock. That is, my nifty calculator says that's about 0.63% return on Verizon for next week, which is great. We do that 4 times a month, and that's a really good return. Do 0.63 times 52. You do that every year. That's the power of this strategy. So that's how I put these trades on. Actually, I think I'll run you through one more right now. Just to kind of show you what a rolling order looks like. But you can see we got our contract here, 7 days away. Here's our strike, so Verizon is all set. Let me see. I have EEM in one of our portfolios, so let's run through on, instead of buying back and then selling a new one, just creating a rolling trade. And this is a little bit more advanced. A lot of our subscribers will know how to do it. It's not necessary. I do it on some. I do the other way on others. It just kind of depends on what the stock's doing. Stocks like Verizon that have a really tight bid-ask, I have no problem rolling. Something like Apple that has a big spread between the bid-ask, the market makers can kind of take advantage of you there. So what we want to do is EEM, it has a tight one, so we'll go ahead and create a rolling order. We have 0 days left in this option. We sold the 39s. I'm going to go back here, and I'm going to create a rolling order. So instead of creating a closing order, we're going to create a rolling order. So this will come up, and it's technically a calendar spread, but don't worry about that term. You can see right here we are going to buy back our 39s right here, this because it's a plus one, meaning we're buying, and we're going to sell a new one. Well, currently EEM is at 39.66, so we'll go to this strike right here, and 7 days away, and we want to sell this week. Let's sell the 40s. So we're going to sell the 40s at 26. You can see a really tight bid-ask spread at 26 and 27. So we're going to sell the 40s. So let's just change this to a 40. We'll be selling the 40s, and we'll be buying back the 39s. It's a negative credit because EEM went up this week. So, you know, that's normal. We'll be, you know, so that's okay. And then we just press confirm and send, and these typically take a little bit longer to fill, you know, and but not too much. So basically that order, we can go to our monitor tab. I can click up here on working orders. Oh, there it goes. It was just filled. I can click up here on working orders, and it's done, and it's under my filled spread right here. So that's how you do a rolling order versus just buying back last week's option and selling a new one. And hopefully that answers a lot of your questions on the mini options and kind of just the process that I go through to do this each week. It gets super easy as you do it. As always, if you guys have other questions, just go to optionsherpa.com and you can press contact me, and I'll answer anything that I can. So that's it. Have a good trading day. Expect the trades to come out.